All right, let's jump right into it today. We're going deep on corporate takeovers.
Oh, yeah. It's a fascinating area.
It is. It's high stakes. And we've got this academic paper that you sent us.
Mm-hmm.
Do classified boards deter takeovers? Evidence from merger waves from the Journal of Financial and Quantitative Analysis?
Really dives into some of the mechanics of how companies get acquired.
Yeah. It's a 2024 paper by John Kadyrzhanova and Lee. We'll break down what they found, but more importantly, what it means for investors and the market in general.
Absolutely, because at its core, this research looks at the impact of classified boards and how they affect a company's chances of becoming a target.
So, okay, let's start there. What exactly is a classified board? I feel like we hear that term a lot,
Yeah.
but I'm not sure I could give a good definition.
So think about your typical board of directors, right? Usually the whole board is up for election each year.
Right.
But with a classified board, it's different. The elections are staggered. You only elect a portion of the board each year,
Okay.
and those directors serve longer terms.
Interesting. So it's not like a clean sweep every year. It takes longer to change who's actually on the board.
Exactly.
But then how does that tie into this whole takeover idea?
Well, the traditional view is that this staggered election process makes it harder to pull off a hostile takeover.
I see.
Even if you have enough shareholder votes to, make changes.
Yeah.
It takes time because you have to wait for those board seats to open up.
Oh, so it's like putting a speed bump in there. It slows down anyone trying to take over and buys the existing management more time.
Precisely. It makes it much more difficult to quickly gain control.
Okay. But isn't that kind of a double-edged sword? I mean, is that always a good thing?
That's the big question.
Yeah.
And that's what the researchers really tried to get at. While it might prevent some takeovers, it could also mean that underperforming management gets to stay in charge longer.
Right.
They're shielded.
Okay.
What if a takeover would actually benefit the company and its shareholders?
It's that balance, right? Protection versus potentially keeping things stagnant when they need to change.
Exactly.
But, okay, how do you even study this stuff? I mean, there are so many factors that go into whether a company gets taken over or not.
Oh, there are tons of factors. And to get around that, the researchers focused on specific periods. They call them merger waves.
Merger waves.
Yeah, think of it like this. Certain events or trends can suddenly make companies in a specific industry prime for consolidation. Maybe there's some new tech, or maybe regulations change.
Okay.
It creates tons of opportunities for mergers.
So, like, everyone wants to get in on the action. All of a sudden, companies in that sector are the hottest targets.
Exactly. And by studying companies during these waves, the researchers could isolate the impact of a classified board. They compared companies that had them to those that didn't.
Okay, so kind of a level playing field. Everyone's facing the same pressures and opportunities, but some have this classified board shield and some don't. What'd they find?
Well, the results are pretty clear. During these merger waves, companies without classified boards were about twice as likely to get a takeover bid.
Wow, twice as likely.
Yeah, compared to the ones that had the classified boards in place.
That does seem like pretty strong evidence that those staggered board elections have a real effect.
Right. And it gets even more interesting. They found that the difference was even bigger during waves where there was a lot of potential for synergy, where combining companies would lead to a lot of efficiencies.
So the companies with the classified boards were more likely to resist being acquired, even if it might have helped their shareholders overall.
That's what it seems like, yeah. It's a really interesting finding.
Okay, so classified boards can definitely deter takeovers, but is that always a good thing? This makes it seem like it's not so straightforward.
Right. It's a much more complex question. And that's really what we're going to get into next. This research feeds into this whole debate about whether these boards protect bad management or whether they actually encourage long-term investment and make a company more stable.
All right, so it's not as simple as classified boards are good or they're bad. There are potential benefits and potential downsides. Let's break that down after a quick break. Okay, so we're talking about the potential pluses and minuses of these classified boards. On the one hand, they might shield a company from a takeover that would interrupt their long-term plans.
Right, there's this whole idea of bonding benefits. The argument is that it creates stability, so management can focus on things that might take years to really pay off.
Like research and development, or maybe building a strong company culture. Stuff they might not do if they're always worried about someone coming in and taking over.
Yeah, exactly. But then you have the other side of the coin, what we call agency costs. That's the worry that a classified board just protects management even when they're not doing a good job.
So it becomes this kind of closed system. The board and the executives protect each other even if it's not what's best for the shareholders.
Right. It's a tough one, really.
Yeah.
How do you weigh those benefits against the risks?
It is, yeah. And it sounds like this research doesn't give us a simple answer.
It doesn't. But it does give us some strong evidence that they do affect whether a company gets taken over, especially during those merger waves.
And that in itself is useful for investors, right? Trying to figure out which companies are vulnerable and which ones aren't.
Oh, absolutely. It's a key piece of the puzzle.
Mm-hmm.
But let's zoom out for a second. What does all this mean for the market as a whole?
Yeah, good point. I mean, one of the things that makes a market healthy is that capital gets allocated efficiently.
Right. You want money going to the companies and the projects that are going to produce the best returns.
Makes sense. That's how you get innovation and how the whole economy benefits. So how do classified boards fit into that?
Well, if they are preventing takeovers, especially when there's a lot of change happening and restructuring might be necessary, then they could be messing with that flow of capital.
Oh.
Think about it. A company that's not doing so well might be better off being acquired by a competitor that can run things more efficiently.
Right, so its assets are being used more effectively.
Exactly. And a classified board might be blocking that from happening.
So it's kind of like a barrier to the market doing its thing.
That's the concern. And it raises questions for policymakers, too. If these things have big effects on the market overall, then they need to be part of the conversation when we're talking about regulations and competition.
Right, it's not just about individual companies, it's about the whole system.
Exactly, yeah. Now, the research also looked at these state-level laws called shadow pills.
Oh yeah, shadow pill. I've heard of those, but I'm not totally clear on what they are. Can you explain?
You've probably heard of poison pills.
Yeah, companies use them to make themselves less attractive to potential buyers, right? Like make their stock harder to buy up.
Right, it makes a hostile takeover way more expensive and complicated.
Right.
Well, shadow pills are kind of like implicit poison pill protection.
Okay.
In states that have these laws, companies don't have to actually put a poison pill strategy in place officially.
It's like they have this weapon they can use whenever they need to.
Exactly. And what the research found is that in states with shadow pill laws, classified boards were even more effective at preventing takeovers during those merger waves. It's like double protection.
So even the laws and regulations where a company operates can affect how all this plays out.
Oh, absolutely.
Yeah.
And it's important for investors to understand that things that have nothing to do with a company's finances can determine what happens to it.
It's like you have to know the rules of the game before you start playing.
Yeah.
Okay, so we've got classified boards, shadow pills, this whole question of how capital gets allocated, and the debate about whether these boards are good or bad for shareholders. Anything else from this research that our listeners should know about?
Well, they also looked at other things companies do to prevent takeovers.
Things like supermajority voting requirements or golden parachutes for executives.
Exactly. They wanted to see if having a classified board still made a difference, even when you take all those other things into account.
Interesting. So what they find, do those other defenses actually matter, or is it really the classified board that's driving everything?
It's interesting. Even when they controlled for all those other anti-takeover measures, the classified board was still a significant factor in preventing takeovers during merger waves.
So it's not just that companies with classified boards happen to have other defenses in place, too. The board structure itself seems to be doing something unique.
That's right. None of the other individual provisions or even combinations of them had the same effect.
Huh. It really shows you how important it is to understand how these boards work and what it could mean for investors.
Definitely. It adds a whole other layer of complexity to corporate governance.
Okay. So we've covered a lot today. We've seen how classified boards can be a shield, but also potentially a roadblock. And we've talked about the bigger implications for how the market works and even policy decisions.
Yeah, it's a complex issue with no easy answers.
Yeah.
But this research gives us some really valuable insights into what's going on.
It definitely gives us a lot to think about. But before we wrap up, let's shift gears a bit and bring it back to you, the listener. So we've been talking about this research paper, what it means for investors, how the market works. But now I want to turn it over to you. What are your takeaways from all this? Anything that surprised you?
Yeah, I'm really curious. Would this research change how you think about investing in companies? Like if you're looking at two companies, one with a classified board and one without, does this information make you lean one way or the other?
That's a good question. It definitely raises some interesting things to think about. We've been focusing a lot on how these boards work during those big merger waves.
Right, when whole industries are going through these huge shakeups.
But I'm wondering, what about when things are going the other way, like during a recession or when there's a lot of uncertainty in the market?
Oh, that's a great point. Does the classified board still play the same role then? Could it actually become a disadvantage?
Yeah, could it? I mean, it might be that in a downturn, when companies are more vulnerable, having that extra protection is even more valuable.
Right, like battening down the hatches.
Exactly. But what if that protection makes it harder for the company to adapt?
Yeah, if they need to restructure or make quick decisions to adjust to a tough environment.
Maybe they get slowed down by the board.
It's like that saying, what got you here won't get you there. Something works in one situation might not work in another.
Right. And that's why this research is so useful. It doesn't just give us answers, it makes us ask more questions. It helps us think more critically.
Definitely.
So as an investor, it's not enough to just know, does this company have a classified board?
You got to think about the bigger picture.
Yeah.
The industry, what's happening in the economy, what the company's long-term strategy is.
It's about understanding the whole context.
Exactly.
All right, well, we've gone pretty deep today. We started with classified boards and takeovers, and we ended up talking about how companies are governed, how markets work efficiently, even how laws and regulations can influence things.
Yeah, it's all connected.
And this is really just one piece of the puzzle. There's always more to learn and explore.
Absolutely.
But if there's one thing we hope you take away from this, it's to be a skeptical investor. Don't just take things at face value.
Ask questions, dig a little deeper, challenge your assumptions.
Well, that's how you really start to understand what's going on in the business world.
Mm-hmm.
And ultimately, that's how you become a better investor. Thanks for joining us on this deep dive. We'll catch you next time.